Shares of Nasdaq, let's see how they're trading today, higher by about 4%. That's after an earnings beat. And there we had revenue growing, Julie, about 5%. We know there was this trickle of companies making their public debuts. That helped, even as we saw this, I guess, contraction in equity trading. Some on the street were encouraged by what they saw with this recent IPOs. And Nasdaq, of course, winning ARM, winning Instacart. Analysts knowing that Nasdaq did win nearly 90% of new U.S. corporate listings this year.
Yeah, and that falls into its capital access platforms division. That's where that revenue goes. Sales there were about 8% higher. Index revenues were up 15%, and that's because there are a lot of indexes and exchange-traded funds that are linked to the Nasdaq 100 in particular. So that business did well as well, saw about $5 billion in net inflows. The stock is down this year, so that's one of the things to watch. It is undergoing a deal for a software company, financial software company called Adenza for $10.5 billion. So there has been a little skepticism over that deal that's driven the shares down. So also a little relief, perhaps.
Yeah, it's interesting. We have spoken to some really smart venture capitalists here who say the pipeline is building, but you look around, you see these concerns about the economy and rates and war, and you wonder when that window really opens.
It's a good question. It's interesting that Nasdaq could do well, even with the relatively small number of offerings.